This morning was another weird open. MES was chopping up and down before market open, and then when the market opened, it just fell through the floor. I could have made a killing off of that had I known that MES was going to fall through the floor because everything else followed. I closed my XSP position. This was my XSP position. It was a debit spread on the call side with an expiry of the 6th. I tried closing it for 16 cents, but that didn't work out. Robinhood was kind of yanking me around on the fill. So I moved it up to 17 cents and still wasn't getting a fill. And I was worried that it was going to reverse against me, which I shouldn't have been. If I had known the market was going to continue falling, I would have just held on to it and waited until it started actually reversing towards the end of the day. But hindsight's 2020. Still realized a profit of $37, which is alone is almost 1% of my account right now. My SPY call credit spread that I opened the 2nd, so yesterday, it's still open. I didn't close it even though it's sitting pretty good. My SPY credit spread has a $61 profit right now, but it's got a lot more to give. So I'm going to hold on to that, wait for it to get a little closer to expiration, and then go from there, whether or not I want to close it or hold it all the way up until like the last week or two of expiration. I have yet to decide on that. As it is now, I'm looking to close that position at around 56 cents to try and eliminate a little bit of stress out of my life. If price keeps moving in the direction that it's moving, I might end up closing that earlier, but I might also wait. If price has another day like today, then I could get a lot more of the return a lot faster than expected. You know, if another day like today happens tomorrow, I'll be up, instead of 60 something, I'll be up 114. Actually, no, 117. I thought about doing a call debit spread when XPS hit 690. But I'm still trying to understand the reason for making a debit spread. I don't quite understand it. The trade-off just doesn't seem worth it unless you go really long DTE, like a year. If you go a year out, there's good profit to be made. And minded that I'm assuming the idea is to close it early. To me, that only really makes sense if you have enough money to do that in the first place. I need to figure out more about debit spreads. I need to learn more about debit spreads. I don't know enough. Oh, look at that, 2.5% if I had closed, but I'll make some more there. But I'm trying to learn about debit spreads. I'm still hashing out the details when it comes to debit spreads. I don't see the value. And I might not have an update for you guys when it comes to my account growth for the next, I don't know, couple weeks or so. Just with the earnings for the Magnificent Seven, I think Google and Amazon still have to report their earnings. The data when it comes to the unemployment, there's that whole debacle and the government shutdown and everything. That's what's contributing to the downward slope. And my strategy kind of relies on playing off the highs. So if the market is in a free fall, that's great for my current positions, but it kind of limits my ability to get into new positions because I'm not big enough in my account size yet to do the wheel strategy in a way that makes sense. I'm limited on the types of assets I can have. And my goal for growth is 1% per week. So if I'm sitting here and I've got, 90% of my account locked up into two smaller stocks, like, American Airlines and, I don't know, just pick one, American Airlines and New Holdings or something, right? Or I don't know what SoFi is trading at right now, but like one lot of SoFi, or just pick your combination of smaller stocks, I'd have most of my account tied up and I wouldn't be able to hit my goal. In fact, I wouldn't even be able to hit half my goal. So until I hit around 12,000 to 20,000, I'm really kind of stuck doing spreads. And to be honest, it's been working out. I mean, I had a slow couple weeks here where I went down off my high horse, but you can see I picked up trading back here. I've pretty well had more or less an upwards trajectory. Now that doesn't really do you any justice. My actual return is significantly more than 5.17%. And I'll show you that here in a second. And you can see my 1 month return is 6.38%. The reason that it's significantly higher is because this factors in more accurately my weekly deposits. So with my weekly deposits, I'm aiming for about $500 a month, or not a month, a week. And with my weekly deposits, that skews the percentage on my homepage down. This accounts for that differential and gives me an actual percentage return over the last month, like what my actual return is, factoring in the differences in account size. My actual 1 month return is 6.38%. So I've been killing it. I have a bad trade here, a bad trade there. This one I got robbed on. That was Robin Hood, robbing from the poor and giving to the rich right there. I had a stop loss and someone went probing and found it, and it stopped me out for a $50 loss. That sucked. So you can imagine what my profit loss would be had I actually got a good fill on that instead of getting robbed. You can see my other trades here. Anyways, guys, I hope you enjoy the video. Like and subscribe, leave a comment if you think there's something I can do better, or if you can explain to me why debit spreads are a good idea. I'm more than happy to listen and learn.